Hey everyone, it is Evan here from the Trade Risk on Tuesday, July 30th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off with our dashboard here. You can see markets were mixed today with a standout performer with the Russell 2000. Now, to be fair, it was the underperformer yesterday, so it really just clawed back all of the underperformance and then some today, but still up over 1% while everything else was in red. You can see 5-day change, IWM also standing out here, up 2% while everything else is flat or mixed. If we look at some of the simple moving averages, we're basically above all of the 10, 50, and 200, except for the Dow Jones struggling with that 10 SMA right now in the short term. If we scroll down a bit and take a look at performance by sector, we can still see semiconductors at the top of the list, followed by staples and biotech. So biotech, a new one to join the top three there. And on the downside, we have discretionary, energy, and materials rounding out all in red territory. For major markets, we got volatility up 11% over the past 5 days, followed by oil and silver. And on the downside, we have natural gas, emerging markets, and China. So let's jump into the charts here. Let's take a look at what's gone on. A couple of action items just to keep at the front of our mind as we have the FOMC, the highly watched and anticipated. They always are, or at least we always make a big deal out of them. That is tomorrow, so we will get a bit of a catalyst there one way or the other. The market will have an excuse to move, so let's pay attention to the rate cut, the expectations, all that fun stuff. Just be aware of the timing on that for some market movement. We have earnings season that we're still in the middle of right now. It's a busy week, so we have plenty of catalysts on the individual company and sector by sector basis, so do keep aware of that. Now, getting into the charts here for the S&P 500, this is the weekly time frame cash market where we always like to start our analysis, and you can see we broke to new all-time highs last week. We're kind of just backstepping just a little bit here. We have an inside week right now, which basically just means we're trading within the highs and lows of last week's range. We're down 0.5% on here Tuesday. Of course, plenty of time left in a busy week to change this candle come Friday. But so far, it's an inside week. It's down. It's a pullback here just off of all-time highs. We're still above all major support areas. I'm still looking at 29.55 as the big level that I want to see this market hold above for the intermediate term. So long as we are above here, that to me structurally is positive for this market. Again, you could cheat that a little bit closer to say 29.75 or so if you're a little more active. But for now, we're holding up. We're just off of all-time highs. MACD floating up here in positive territory. Trend is up. So right now, all of this structure is still holding firm and in the bull's favor. Now, on the daily chart, if we get a little bit closer here, you can see we did have an inside day yesterday on Monday on the daily chart for the S&P 500, and then that sort of resolved lower today, and it was, not a definitive, bear blasting sort of sell day or anything, but it was a little bit of follow through to the downside here, and in the short term, that opens us up to, again, as we break this trend line, resolve the inside day down, maybe a little more weakness here to come back and maybe retest 29.75 or chop around in this range. Entirely reasonable here in the short term. Again, lots of catalysts to help exaggerate that or make it happen. So let's pay attention to how this resolves itself in the coming days or so. But for now, again, still holding more or less above the longer term trend lines here, above major or intermediate term support. So while we can expect some pullback here in the short term, we'll need to start violating 29.60, 29.70, this pivot here before we get too aggressive or bearish. At least in my mind, if you're short term and active, then absolutely hedging and playing for these small moves makes sense. On the upside, again, we're just off of all-time highs. So if we start breaking back above 30.26 or so, then we'll be back at all-time highs, clear sailing, no overhead supply. Now VIX here Did get a pretty quick bid off of that 12 level. You know, we were challenging sort of the lows of the year for volatility. We saw a nice kind of push into, say, into the event for tomorrow, about a 17% rally here in 2 days. So we're back up to a 14. That's basically where, quote unquote, resistance has been in the VIX. That's basically where the fear has stopped recently, is right into the mid 14 area. So we'll see if this time's any different, or if this time is some type of catalyst and breakout to the upside for volatility. It's possible. For now, the longer term trend has been down here for VIX, so we'll see if that changes later this week. Now, I think the big story here, to me anyway, is the Russell 2000, because the Russell 2000, if you recall last week, we started to take notice of small caps starting to perform. That was one of the highlights and takeaways from last week's recap videos, is that the Russell was playing some catch up and starting to come to life, and we were basically just waiting to see, can we get confirmation to that first initial evidence, and so far the answer is yes, because if you even just look right now on a on the weekly performance, again, it's only 2 days, the Russell is in the green right now. We're actually up 0.39% on the week here for the Russell. Compare that to, say, the S&P 500, it's down minus 0.54%. Compare it to the Qs, and compare it to the Dow Jones, which is actually flat. But basically, the Russell is kind of stand out here and trying to perform again. And in fact, it's above last week's highs. So it's starting and trying to continue to make these moves. And look at this session here today. It was a pretty impressive day, given the fact that we gap lower. Really a good excuse here for sellers to roll this thing over if, the Russell was going to be kind of kicked to the curb again and continue to underperform as it has done for most of, recent many months. The kind of gap down and technical breakdown today would have been a good excuse to continue that pattern, but we didn't see that happen. In fact, we saw the lows was basically the gap open of the session, and then we went on to put on kind of a bullish engulfing day of the past 3 trading sessions. So to me, this here is encouraging, optimistic, and shows further signs that this may want to play some catch up here. We reinitiated our IWM position. We are long IWM outright this time. Remember, we had we were playing the 3x leveraged ETF in here. We were buying it on, I believe it was this day here. We sold the bulk of it here on this move back up into the top end of this range, and then we exited the rest on this session here, just for a quick tactical 3-4-5% move for the 3x ETF. But now we've put on a little more of a sticky position here in the IWM outright. We'll see if this can continue to lead. We'll see if we can get some rotation there. For now, we're long, wider stop loss, giving it a little more room. But really, again, when we look at structure here, we're still playing this fairly aggressive, because it really starts to need, it really needs to start to get above 159, 160 to start breaking above multi-month, almost multi-year resistance at this point. So we are cheating our entry a little bit earlier. If you'd like a little more confirmation, then you're going to be looking more above 160 or so for that potential breakout. We'll see if that happens for the Russell. It would definitely, be a good light under this market if we can start to get small caps to perform. And then finally, the NASDAQ 100. It's down here on the week a little bit. Minus 0.77%. I think it's the underperformer, but again, structurally speaking, it's still holding above all key support right now. 191, those were the approximate lows from last week. That's where it needs to stay above, in my eyes, to be acting as strong and healthy as possible. For now, in the short term, looks like some chop, maybe another retest, and some sideways action does seem to be in the cards right now. So that is the market recap there for the major indices. Let's now take a look at some of the other major markets. We'll go to TLT, which is up here on the week just slightly. It's real quiet week here, inside week for the TLT. Again, back to the daily chart. Nothing has changed here from our analysis the past couple of weeks. It's basically been, give this thing time. It looks like it's just consolidating sideways here between 130 and call it 133 until and if that changes. We're going to just let this, kind of take its time here and wait for a breakout in the coming weeks. So really no further No further updates there. For USO, a little more encouraging here. It started to look pretty bleak at the end of last week. Remember, the picture kind of looked like this, and we had this, kind of fairly fast, abrupt impulse leg to the downside here on heavy volume, and then it was looking like we were potentially bear flagging and could roll over, but that rollover didn't happen. In fact, we pushed sideways, had an inside session or two, and then we resolved back to the upside. So it looks like, at least in the short term, we got some interested buyers around this mid 11s area. It's holding as support. We're working ourselves back higher, and right now in the short term, looks like a little bit of a pop back into that range, and we'll see how far it can continue. Natural gas slid here all the way back to its year-to-date lows. We do have that momentum divergence that's brewing here. I am very interested in looking at this as a tactical kind of trade, mean reversion back up into this range, looking for, kind of call it a double bottom down here. Again, it's an aggressive trade because all the longer term time frames are pointing down here, and I have no position at this time, but just watching to see how this settles out. We did get the update today. It was very light volume, so I'm just kind of waiting here. I'm fine if I miss it. I'd rather have kind of the perfect entry, especially given the fact that this is structurally on the bigger time frame, it doesn't have the trend on our back. So for me, I'm looking to be a little patient here, but I like the potential for a bounce and hold around this area, maybe a more of a recut and then a higher volume reversal. That would be ideal, but we'll see what happens in the coming days and how we finish off this week. Last but not least, if we look at metals, GLD here starting to move back up. It has been quietly kind of pulling back and consolidating sideways here, really very just meandering here, not kind of lifeless, but it is starting to pick back up, trying to continue this trend to the upside. So we'll see if that can continue here. It's been, kind of meandering here ever since topping out around this 136 area. Topped out initially here, had another attempt above it here, which failed. Now we're starting to come back up it for a third time. And silver, last but not least, is closing. Got a new, almost a new year-to-date closing high. I guess this was the year-to-date closing high back here on the 24th, but looking, like it wants to continue higher here. Really didn't give anything back in this latest consolidation. It was all sideways through time, and now it looks like it's trying to go again. So silver, metals, all together, bulls fairly, intact and in control there on both sides. So that is it. That is what I have for this week's video. Hopefully you're off to a good start to the week. Remember, check those catalysts, check those earnings dates. Let's see how the market gets through the rest of this week. Pay attention to those small caps, and that's it for me. So thanks as always for tuning in and watching. You can subscribe on YouTube or follow us on the Trade Risk. Have a great rest of your day, and we'll see you in the next video update.